Well, crude futures continuing to surge on all the tension in the Middle East, particularly in Libya, but oil traders now concerned what it means for the rest of the region. Oil trader John Woods of J.J. Woods is joining us now from the NYMEX. Let's just talk, John, first about why this surge. Obviously, Libya is a net exporter of oil, but they only produce 2% of the world's crude. So is this beyond Libya at this point?
Well, I think so. I mean, if you look at what's happening in Yemen also, and what we can look at is also what happened in Egypt. It was a peaceful resolution. Here, there's blood in the streets. You have Iranian warships in the Suez, and we've rallied $5 basically on a scenario that presented itself that there's no disruption right now. Now, what happens if there is a disruption?
Right.
And, unfortunately, it looks like that might occur. What you did see was a lot of people that were short this market because at that point it really did look like we were going to come off some more, and they got caught. So there's your initial reaction. You have a reversal in positions down here also.
And the March contract expires today, so we're looking at the April contract.
That's correct, yeah.
We're a few bucks below $100 a barrel. What's your top call at this point for crude in the short term, John?
Well, I think, barring any additional news, I think we've pretty much seen it right around that $95.50, $96 level. What happens is you have a lot of people in this market already, and you're going to take profits on this. I mean, this is a huge, huge move, and to leave money on the table, it just isn't very prudent.
It's interesting when you look at Brent crude, which is now well over $100, and then you compare it to West Texas crude, which is $86. So obviously we've got a stockpile here in Cushing in Oklahoma, a big supply in the U.S., but the global supply isn't mirroring that. So what Americans are feeling at the gas station is this global crude picture. I mean, the U.S. supply isn't factoring in right now, is it?
No, not really. And, if it was, we'd be, plus $100 a barrel right now.
Right.
But like you mentioned, we have our surplus here. And, honestly, they're affected more over in the UK than we are.
What's your take? There's been a lot of talk about, all right, what are we going to see in terms of the domino effect? It was Egypt, now it's Libya. What is next? There's some concerns about Saudi Arabia, although we haven't seen instability there or protesting there. What are your concerns for oil-producing nations in the Middle East?
Well, I think what you have to look at is how they're resolved. I mean, Egypt was a classic example of passive resistance. No one really was harmed or killed. There were some fatalities, but for the most part, you're not seeing the carnage that you see in these other countries, Yemen, Libya. I mean, this is really just the start. I mean, this is you wake up on a Tuesday and you're like, wow, crude oil is $5, $6 higher, and that sends a message that there's a lot of unrest there. And if you look at Saudi Arabia, I mean, that's who we really should be keeping an eye on. Right. Exactly what's going to happen there.
But at the same time, OPEC has said, look, we'll call an emergency meeting if we need to in Riyadh and Saudi today. We had meetings of global oil ministers. Saudi can produce more than they are right now. They say they're willing to. So is there really a supply concern at this point that is rational?
Well, I think, when you talk about the supply, I mean, OPEC really doesn't have the power that they used to. I mean, you see a lot of different countries overproducing. But, what you're talking about is a war, a civil war in, multiple countries, and you have the Suez Canal. I mean, you can produce as much as you want. If you're not getting it out of there, you're going to have some problems. And, right now it really looks like there's some serious issues going on there.
So when we look at what people are spending on crude and all the products that use it right now, it could be soon 5% of global GDP. What does that do to the broader economic recovery in your mind, John? Because this is bigger than just oil prices. This is the question of what this does to an economy in the U.S. and globally that is trying to get on its feet.
Well, it's unfortunate that we did see some signs. I mean, higher oil prices are just really going to stymie our recovery here. I mean, what we're seeing, small leaps and bounds right here, but, higher oil prices, it's a trickle-down theory. It's going to hurt, your transportation, even your cab drivers. I mean, you're going to be paying, $4 plus at the pump for a gallon of gas. So it's just not a good thing, these higher oil prices. So, the economy really can't sustain it, especially the U.S. economy.
John, I know it's a very busy day for you. We'll let you get back to the floor. Thanks so much.
Thanks a lot.